Hi there, I'm Ciaara Hoffmann with Synergy Capital Investments. If you're watching this video, it's probably because you're interested in becoming a passive real estate investor. Maybe you're interested in real estate investing but don't have the time to actively manage a property. Or maybe you do have the time, but you would like to gain the knowledge by initially investing passively with an experienced operator. Either way, investing passively in a multifamily syndication could be a great option for you. So what exactly is a multifamily syndication? Well, basically, it's when a group of people like you and me pool our money together to purchase a property. So that's very simple. And in this case, a multifamily property, which is a building that has multiple units where people live, such as an apartment complex. Now, this can be a great option because when you're investing alone, you can probably only buy a small multifamily property, let's say a duplex or triplex. However, when we pool our money together, multiple people can put in a smaller amount, typically a minimum of $50,000 into a deal. And this allows us to be able to take on much bigger deals, such as a 50 to 150 unit apartment complex. So what are the benefits of investing in a multifamily syndication? Well, number one, it's a hedge against inflation. Multifamily can be a great way to diversify your portfolio during a recession and to hedge against inflation. During an economic downturn, people tend to downsize their living arrangements, making multifamily properties a much more attractive option for them. Additionally, rents tend to increase during inflationary periods, which provides a natural hedge against the erosion of your purchasing power. Number two, stable returns. Now, I've personally invested in stocks, mutual funds, and cryptocurrency, and I've also lost a lot of money investing in stocks, mutual funds, and cryptocurrency. The prices of those types of assets can be highly unpredictable, and sudden market shifts can result in significant losses. On the other hand, multifamily real estate investments tend to be less volatile and provide more stable returns. Multifamily real estate investments are typically less susceptible to sudden market fluctuations because they are tangible assets that produce a consistent cash flow. The value of the property is based on the rental income it generates, and rental demand tends to be relatively stable over the long term. So this means that multifamily real estate investments can provide more predictable returns compared to stocks or cryptocurrencies. Number three is passive cash flow. The most obvious benefit, of course, is that you get to enjoy the benefits of real estate investing without the hassle of being actively involved in the day-to-day operations of the business. You don't have to deal with the terrible tease of real estate investing, that is, toilets, trash, and tenants. Instead, you let an experienced operator handle all the headaches while you receive passive income from the property's cash flow, as well as a portion of the profits when the property is sold. Number four, tax benefits. So another reason why many people choose to invest in multifamily versus stocks or other types of investments is for the tax benefits, such as through cost segregation. So cost segregation is a strategy that allows investors to accelerate the depreciation of certain components of a property, such as the electrical, plumbing, and mechanical systems. By segregating these components, they can be depreciated on a shorter schedule than it would be for the entire building, and this can result in a significant reduction in your taxable income. Number five is to limit your liability. So investing passively in a syndication helps to limit your liability as a passive investor. Since you're not responsible for the day-to-day operations of the property, your liability is limited to the amount of your investment. So this means that if something goes wrong with the property, such as a lawsuit, you will not be personally responsible for any losses beyond your initial investment. This is in contrast to being an active investor, where you would likely be personally liable for any losses or damages that occur on the property. So by investing passively, you're essentially entrusting the management of the property to the sponsor of the syndication, who is responsible for making all operational decisions and managing the day-to-day activities of the property. This can provide peace of mind for investors who may not have the time or expertise to manage a large multifamily property themselves. So in summary, investing passively in a multifamily syndication can provide you with access to real estate investing opportunities that may have been out of reach otherwise, while also limiting your liability and providing tax benefits. So if you're interested in learning more about this type of investment, then stick around tomorrow for day 2, where we'll explain terms like cash on cash, equity multiple, AAR, and IRR. These are all key financial metrics that you will want to understand when evaluating multifamily syndications. Thanks for watching, and see you tomorrow on day 2.